It's time for your Low Country real estate market update. It's the Brian Beatty Real Estate Show. Brian is one of the top 1% real estate agents in Charleston. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. Now, broadcasting from the WTMA studios, here's your host, Brian Beatty.
Good morning, Charleston. This is the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. Thanks for joining me this morning. Thanks for starting your new year off right, listening to me here on the radio, talking about real estate. If this is your first time tuning in, I've been doing this program for about 2 years now, and we talk about real estate here. We talk about residential real estate. I like to take local, regional, national news, apply that to you, the buyer, investor, the seller, here in the Low Country, so that if you're thinking about making a move, you've got some quality information based on market data and my experiences as someone that's been in the top 1% of agents here in Charleston since 2009. So again, we can make some informed decisions, real estate related, and hopefully I'll make some money together. If you'd like to reach out to me at any point in time, you're thinking about buying, selling, investing in real estate, I am a real estate agent, please feel free to go to my website, listingsincharleston.com. You can contact me through there. You can take a look at everything for sale, take a look at everything I've sold. You can see every house for sale listed by every single real estate agent in our Tri-County area. And if you're thinking about selling your house, this incentive still applies in 2015. I think it's going to be another fantastic year in real estate. So if you're thinking about selling your house, click on the Sell Your Home tab. You can learn more about what I do to market my properties for sale. You can also learn more about my 59-day home sale guarantee, which simply states I will sell your home in less than 2 months, or I'll sell it for half my commission. So listingsincharleston.com is the website for that. And I am in the studio this morning taking your calls. We want to talk with you about your real estate experiences in 2014, your goals for 2015, anything real estate related at all. Feel free to call into the studio. The number here is 843-556-1250, 843-556-1250. So, first show of the year, and of course it's resolution week. Everybody's making their New Year's resolutions. And if you look at the list of resolutions, if I were to give a top 10 list, I'm sure number one on the list personally would be to lose weight. And then number one on the list from a professional level, I would say, would probably just be make more money. And so if you're considering investing in real estate, I want to talk a lot about that this program. We're going to talk about it in length a little bit later on this hour. But if you're thinking about investing in real estate, there is still time to get in. You know, a lot of people said that the year of the investor has passed, and there's just not the opportunities out there like there were. And that's true to an extent. However, if you look at real estate investors as an occupation, they find ways to make money in real estate every year, regardless of market conditions. So if that's one of your resolutions is to make more money in 2015, real estate can be a fantastic vehicle for that. Or maybe you're thinking about getting into our field. If you're thinking about doing so, then I invite you to contact me. I'm happy to answer any questions you might have. A lot of people got into the business in 2014 and the prior year because our market's good. Sales are up, and it's a good time to get back into real estate, especially for those that were in it. The market crashed. Things got tough. They decided they needed to do something else for some guaranteed income, and now they've gotten back in. So that, of course, comes with its own set of circumstances and at times challenges for clients and for those agents, but we're not going to focus on that so much this hour. What I did want to focus on, at least initially, was what made up 2014. What defined 2014? What were the indicators of our housing recovery? And I would say number one was just overall improved economic financials and fundamentals. You know, people were making more money. People were getting those promotions that they've been waiting years for. People went back and they got some additional education when the market kind of downturned and returned to the workforce and were able to get more money in their field. We look at GDP growth. We look at just overall all the things as a nation that we've done to boost ourselves economically. We're there. We're getting there. Jobs are up. Unemployment is down. It's just a good overall financial climate for us here in the United States. So that's number one, first and foremost. And if we look at number two, which kind of ties into that, is historically low interest rates. Interest rates in 2014, harbored around 4%. I think the lowest interest rate I saw was 3.375 on a primary residence, which is incredibly low. I mean, that's almost free money. And of course, I saw them higher than 4%. It depends on what type of property you're buying, whether it's a primary residence or a second home, investment property, multifamily property, you're building a house, you're buying a lot, whatever the case might be. But right around 4%, and they're still right around there. So it's still a fantastic time in terms of affordability to purchase property, and it's driven by the interest rates. And of course, one of the big news stories in 2014 was Federal Reserve's announcement that they were going to taper off, and that quantitative easing is no longer, and that as a result, they expect interest rates to rise. And they say that, experts say that it's going to be at some point in the second quarter of this year, and that is yet to be seen. One of the things that we, as an industry, could have really relied on in 2014 was that interest rates were going to go up. That's what we were told, is that interest rates were going to rise. The fundamentals were there for interest rates to go up and to expect it and to get your clients to buy now or sell now. And I have never been a proponent of using scare tactics to get people to buy, sell, or invest in real estate. I'm about delivering quality information so you can make an informed decision based on your own personal goals. And although I do think that interest rates are going to rise this year, I don't think it's going to be a doom and gloom scenario where we're looking at a 6% interest rate. Personally, I don't see that happening. We've had, and think about this for a second with me. If you look at 2012, 2013, and 2014, where we had price appreciation, we had price gains, that affects the affordability of housing. And I did an interesting calculation in my previous show, the last show of 2014, which you can get on my website, by the way, listingsincharleston.com. But a 10% increase in pricing is, simple math here. If the price of the property increases 10%, then the price of your monthly payment increases 10%, right? Right. Well, if interest rates increase 1%, if interest rates go from 4% to 5%, it's a 15% increase in your monthly payment. So if you take those two and add them together, a 10% increase in pricing coupled with a 1% increase in an interest rate, and suddenly you're looking at a 25% increase in your monthly mortgage payment. Isn't that incredible? So if you think about it that way, does it make sense that the government or whomever you like to blame interest rates on is going to raise them by such a fantastic number that it's going to prevent people from buying houses? And I don't want to get into the whole first-time home buyer segment because I think that that's where it hits people the hardest. But if we look at 2014 in general, we had fantastic interest rates. I think that's going to continue into 2015. Is it going to change the second quarter of 2015? I have no idea. None of us do. But I don't think it's going to increase at such a accelerated rate that it's going to have a negative impact on our market. Let me know if you agree. Feel free to call in. 843-556-1250 is the number here in the studio. And I'm taking calls and would love to hear from you. I'd love to hear your opinion on what's going to happen in 2015 with regard to real estate. Or if you had a great story about something that happened in 2014, feel free to call in. 843-556-1250. Number three, in terms of what defined our market in 2013, was really kind of a return to normal price appreciation. If we look at 2013 as being a year where we had double-digit increases in pricing, we didn't necessarily see that in 2014. Now, don't get me wrong, we saw it in some areas of Charleston, but overall across the board, we did not have a 10% or more increase in the value of real estate. Again, it's property specific, it's neighborhood specific. There are plenty of areas that saw that kind of appreciation, but overall, we kind of returned to a normal rate by which properties appreciate, and that's okay. It's not sustainable to have 10% increases in pricing year over year. No one would be able to afford it in 5 years. So it was a year where we returned to an average pace by which properties appreciate in value. So it created this return to normalcy. And normal is okay. All right? It's okay. Number 4 was a decline in distress sales. And we saw this in a big way in 2014. And I was just talking with my producer, John, about this and how short sales and foreclosures, there's just not a lot of them out there. And people still, when people contact me and say, Brian, we're looking for a good deal, we only want to see the short sales and the foreclosures in this area. I say something like, all right, well, I'll send you all 3 of them. There's just not a lot of them out there anymore. I mean, we have had a significant reduction in distress sales. They're still out there, but the thing to know about short sales and foreclosures is that because of the type of market we're in, short sales, foreclosures are going to sell for right around the same price as a normal resale or a normal new construction home. There's not a ton of incentive on the bank's side to give you a great deal on that property because there's a lack of inventory. A buyer is going to pay a higher price to get into that property, assuming they have the patience to wait for a short sale, or they have the ability to make their own repairs, or whatever the case might be, because those deals are a little tricky as it relates to short sales and foreclosures. But the bottom line is that short sales and foreclosures have reduced significantly, which has an impact on number 5, the lack of major investors in our market. In Charleston, we had institutional investors that came from all over the world to invest in Charleston. And think about that for a second. Think of all the positive press that we've gotten in Charleston over the past several years. Number 1 travel destination, one of the best places to retire, one of the best places to live, one of the top 5 most attractive areas to live. The list goes on. It's just an awesome place to live. I love living in Charleston. A lot of people do. And so it's a hub for people that want to invest in real estate, because when prices go up and you have that natural demand to live in an area, it's going to attract investors. Well, as we see these price increases and as we see interest rates go up, and rent doesn't go up at the same rate of inflation, then the deals just get less attractive for those major institutional investors. Now, don't get me wrong, they're still out there. There are plenty of investors in the Charleston area that own 2, 3, 4, 5, 6, 700 homes as an entity. And then you've got all the other people that say, hey, you know what? Maybe this is the year that I get into real estate on the investment side of things. And they don't do their due diligence, and they don't track their numbers, and they don't have realistic expectations. Those are the ones that you really have to worry about, because if you've decided that, hey, I've saved up enough money and I'm going to get into real estate as an investment, and you don't align yourself with somebody that's been there, done that, helped people on a consistent basis and has a good track record of making people money in real estate, I caution you to really understand what you're doing, because it's your money at stake. So just have a good understanding of what you're doing. Know the pocket that you're interested in. Know what the trends are in that market, and plan and use that information to your advantage. And if you need any help in that field, feel free to give me a call personally. 843-345-1273. That's my cell phone. 843-345-1273. Or go to my website, listingsincharleston.com, and contact me. I'm happy to help you through that, even if it's just general questions you might have about the process. So we're going to take a break. When we come back, we're going to talk about a few things that might be holding us back in terms of continued recovery in 2015. Just some things to be wary of, nothing too major. And then we're going to talk about some big news as it relates to short sales and taxes, which we all love. This is the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA. We'll be right back.
More stimulating talk on real estate matters with Brian Beatty next on 1250 WTMA. Now, the Brian Beatty Real Estate Show continues on Charleston's Big Talker 1250 WTMA.
Welcome back, Charleston. This is the Brian Beatty Real Estate Show. Thanks so much for joining me this morning, where we talk about real estate here in the Low Country. If there's anything I can do for you, if you're thinking about buying, selling, or investing in real estate this year, and you want the help of a professional, I have been in the top 1% of agents here since 2009 and would be honored to work with you. Feel free to go to my website. You can learn a little bit more about me. You can search the MLS. You can read some testimonials from past clients, and you can click on the Sell Your Home tab and learn more about my 59-day home sale guarantee, which simply states that I will sell your home in less than 2 months, or I will sell it for half my commission. A lot more information on there than just that, but listingsincharleston.com is the website to go to. You can call me personally at 843-345-1273. And I'm in the studio this morning. First show of the year. Figured I'd be here to take your calls, address any concerns you might have about real estate, answer any questions you might have. The number here in the studio, 843-556-1250. 843-556-1250. So before I took that break, I was talking about what defined 2014. What were the big things that happened last year? And there are just a few more things that I want to mention in that regard as things to look for. Nothing too major, nothing too significant. This is not a doom and gloom segment. This is not the sky is falling. This is not the real estate market is going to crash this year. It's just some things that I've noticed that I think are worth mentioning. And the first one on that list is that we still, in large degrees, have tight credit standards. And maybe that's not such a bad thing. We have seen over the past 12 months or so, credit standards loosening. We've seen Fannie Mae and Freddie Mac do some things to make homes more affordable for people. They, in the most recent past few weeks, rolled out the 3% down mortgage, which is great. Usually FHA is 3.5% down, so they bumped that to 3%. They did some things with regard to getting a new loan. If you had a short sale or a foreclosure, they significantly shortened the amount of time by which you have to wait in order to get a new loan. One of the things that's still pretty tough is that if you're self-employed and you want to get a loan, just be prepared. I just closed on a refinance this week on a property that I purchased, remodeled, and then refinanced out of a construction loan into a permanent 30-year fixed loan. And the process of providing them with documentation in order to get that refinance done was pretty exhausting. And there's no silver lining to it. There's no sugarcoating on the fact that if you're self-employed and you've got some streams of income and things are a little more complicated than just, working at Radio Shack and getting a check every 2 weeks, then just prepare. There's nothing wrong with it. Don't get too upset over it. They just need to cover their bases. They need to make sure that if they're giving you a loan, that the numbers that you're giving them are verifiable and that you've got the ability to pay the mortgage. That's it. So number one, just something to not necessarily be concerned about, but something I've noticed is that credit standards are still fairly tight. Could they loosen up a little bit more? Yes, I think they could. I don't think we need to get to the point where we're doing, no documentation loans, stated income, stated asset. Hopefully we learned our lesson in that regard, and that will never happen again because we all know what happened. People abused the process and the system and crashed our market, basically. But number two, in terms of things just to watch for is number two, limited inventory. Now, new construction is working on this. We had in 2014 kind of a lull in terms of new construction inventory. They were playing the catch-up game. We were buying more homes than we did in 2013, yet the inventory didn't really change. So in effect, if you look at the months of inventory, we went even more into a seller's market in 2014 than we were in 2013. So we need to bridge that gap. And new construction is going to help us do that. So I expect that to ramp up. They say that they're going to have a 20% increase in new construction this year, which will, I think the number is increase overall sales by 5%, which is needed. We need inventory. Again, we're talking about a return to normalcy, which is a good thing. Obviously, it's been great to sit down with people and say, hey, we are in an extreme seller's market in this area, and I expect that your house will sell in 30 days or less for this price. And they kind of raise their eyebrows like, wow, that's more than we thought we could get. That's fantastic. And it's nice to be able to sit down with people and say, hey, you have equity, rather than, I'm sorry, your home is only worth X. Have you considered doing a short sale? So that conversation at the table with sellers has changed for the most part. There are still people out there that need some help, and we're going to talk about that in a second. But we're talking about limited inventory, and it's still out there. And if you're looking in Mount Pleasant, my gosh, inventory is still incredibly low. If you're looking in downtown Charleston, inventory is very low. Several other pockets of our market, inventory is just low. I mean, try and find an oceanfront condo in Wild Dunes at a reasonable price. Very challenging to do. And I've got plenty of buyers for all of these locations, but we're waiting for the right property to hit the market. And so that's a little signal to sellers out there. If you're thinking about selling your house this year, there is pent-up demand. Make no mistake about it. There is pent-up demand for many areas of our Tri-County. And if you're thinking about selling your house, you should at least get an idea of what your house is worth. And I'm happy to do that for you. No cost, no obligation. Happy to tell you what your house is worth and happy to provide you with updates on your area. Or if you're a buyer and you just want to know what's going on out there, let me know. I'll set you up with a search. It'll take us 10 minutes. And it's just a way of you staying informed with our real estate market. So feel free to go to my website for that, listingsincharleston.com, or call me personally, 843-345-1273. And as a reminder, I'm in the studio. If you have questions, comments, concerns, complaints, whatever the case might be, feel free to call me here in the studio, 843-556-1250. So number 3, something to watch for in 2015, and I've talked about this a lot last year in 2014, which is still kind of weird to say, by the way, last year, is just the depressed level of first-time home buyers. And we talk about the incredible amount of student debt out there for people that graduated in various fields and expected to get a job. They were unable to get a job at the wage that they expected to make. So they went back to school. They got more education, which is the right thing to do. And in the process, racked up student debt. Well, now that they're getting back to work, we've got to do a better job of saving some money and paying down our debts in 2015, especially in first-time homebuyer fields, so that they can become homeowners. Because as I mentioned last segment, a 10% increase in pricing coupled with a 1% increase in your mortgage rate equals a 25% increase in the cost of ownership of that house. So it's important, in my opinion, to really attack your debt so that you become eligible to purchase a home now versus kind of doing it lackadaisically and waiting maybe 6, 9, 12 months. Try and do it now. Ask for help. Get that debt paid down and get yourself into a home if you're paying rent unnecessarily and you have the ability to buy a house and you've got a good job. So that's number 3, is just depressed levels of first-time home buyers, which I expect to really take off this year. I expect that first-time home buyers, not necessarily to take the place of investors, but I expect that our sales will be very similar to 2014. It's just that we'll have more first-time home buyers and we'll have less investors. And then number 5, and we kind of touched on this, but the lack of recovery in some of the smaller, I would say, kind of the builders that only build a few homes a year. I'm not talking about the national home builders. I'm not talking about D.R. Horton. I'm not talking about Centex. I'm talking about the people locally that want to build a few homes a year, or they want to build a 10-house neighborhood. The financing for them is still basically non-existent. And we need some of those builders out there to snatch up the vacant land listings that we've had trouble selling for years. And the issue with vacant land is that in many cases, sellers bought at such an incredibly high price that the only way they can sell would be at a short sale or at an incredible loss. And most people aren't willing to do that. So as our market recovers, people will be able to sell those vacant land listings at a reasonable price. And then we'll actually have the financing in place for local builders to buy them, put spec homes on the market, fix our inventory issue, and everybody wins. And so that's number 5. So let me switch gears for a little bit here, and let me talk about some really big news that Barack Obama signed into legislation right before Christmas, and it's called the Tax Increase Prevention Act of 2014. And I'm going to hit on this for just a minute. I'm going to give you the bullet points, but we're going to talk a little bit more about it a little bit later on in this program. But essentially, this is what this did. I have talked on this program a lot about short sales and the Mortgage Forgiveness Debt Relief Act of 2007. Basically, what that meant is prior to 2007, if you did a short sale on your house, and let's say you had a mortgage for $500,000, but you sold that property for $400,000. That creates $100,000 in forgiven debt in the eyes of the bank. In other words, they're going to let you walk away. They're going to let you sell that property, and they're not going to come after you for that $100,000. Well, prior to 2007, guess what? That was perceived as taxable income. So at the end of the year, you were going to get a tax bill that said you made $100,000. That was income. So the Mortgage Forgiveness Debt Relief Act of 2011 said, you know what? If it's your primary residence, no, that is not income. You do not have to pay the IRS as if that were taxable income. And that's been extended several times over the years, but it expired on December 31st of 2013. And we went the entire year in 2014 without it being extended. Obviously, people were doing short sales. They were closing on short sales. And without this act, without this relief in place, they were under the assumption that they were going to have to pay income tax on that forgiven debt. Well, finally, just before Christmas, they extended that program so that if you did a short sale in 2014 and it was your primary residence, and I think the limits are up to $2 million or $1 million if you're married filing separately, and it's your primary residence, that difference between the amount of your mortgage and what you sold it for is debt that will be forgiven and it will not be taxed. How awesome is that? We've been waiting all year for it. It's really important for you to note that. So that was the really big news. And frankly, we needed that news because people are just now getting back on their feet. They're making some money. And that's really helpful because a lot of people do not have the ability to pay taxes on significantly increased income. They don't plan for those types of things. And unfortunately, some real estate agents aren't even letting their clients know that the difference could be taxed. If it's a second home or if it's an investment property, you need to know that it will be taxable income. This only applies to primary residences. Anyways, more information about that, contact your attorney, contact your accountant. They'll walk you through that process. This is just kind of a news break to let you know that if you did a short sale in 2014 and you're getting ready to do your taxes and it was your primary residence, good news. That is not taxable income. We're going to keep this discussion rolling when we come back. This is the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. Again, reach out to me, 843-556-1250 here in the studio, and ask me any question you'd like. Or if you're thinking about buying, selling, or investing in real estate, go to my website, listingsincharleston.com. We'll be right back.
Have a real estate question? Ask Brian Beatty. Send him an email, lowcountryhomesales@gmail.com. The Brian Beatty Real Estate Show is on 1250 WTMA. 1250 WTMA. Expert news and views on the Low Country real estate scene. The Brian Beatty Real Estate Show on 1250 WTMA.
Welcome back, Charleston. This is the Brian Beatty Real Estate Show. Thanks again for tuning in this morning. This is the point in the program where I always just like to say thank you for tuning in. Thank you for trusting me as your real estate advisor. And just thanks for listening to me rant for about an hour to talk about what I love, which is real estate. So if you're thinking about buying, selling, or investing in a home in Charleston in 2015, feel free to reach out to me. I can be reached at 843-345-1273. That's my cell phone. Or you can go to my website, listingsincharleston.com. And on that website, you can take a look at everything for sale in our market. You can look at what I've sold over the years. You can read some testimonials from past clients. And if you're thinking about selling your house, click on the Sell Your Home tab. You can get a brief glance at what I do to market my properties for sale and the success I've had with that. And then you can also learn more about my 59-day home sale guarantee, which very simply states that I will sell your home in less than 2 months, or I'll sell it for half my commission. Listingsincharleston.com is the website for that. If you have questions, I'm in the studio, 843-556-1250, 556-1250, if you have any real estate questions this hour. What I want to talk about now, as we get into 2015 and as we watch our market change, is the flippers and the buy and hold, the investors of real estate. And I mentioned a little earlier in the hour that I expect to see a reduction in the number of investors this year. And I think that's true. Whenever you have properties that stop appreciating at an aggressive rate, you see less flippers. What do flippers do? They take advantage of the market. They buy low and they sell high. And when you have double-digit appreciation in any market, then that certainly favors flippers. So what's going to happen with flippers and what's going to happen with those that choose to buy and then just hold that real estate as rental property? Well, first and foremost, the deals are still out there, but they're very hard to find. And the reason they're hard to find is because we're kind of in the middle of that transition of investors on a national level that focus on Charleston, that have a few hundred properties here or that want to have a few hundred properties here. They're starting to realize, hey, you know what? We're just not seeing those price gains anymore. We're not seeing that rapid appreciation. Maybe it's time to pull back. But then we've also got the people that say, hey, maybe this is the year to invest in real estate, and they're jumping in. So we're kind of in that transition phase right now. And that's not necessarily a bad thing. I don't want you guys to look at this as being good or being bad. It just is what it is. But if you're someone that's thinking about investing in real estate, maybe that's a good opportunity for you to align yourself with a real estate agent that really knows what they're doing, understands the market, and has a track record of helping people invest in real estate. And maybe they're an investor as well. I'm certainly an investor in real estate. My family that's how they built their wealth in real estate, is through real estate investments. And I own rental properties. I've flipped properties. I've helped dozens of people do it. And it's something I enjoy. I like helping people make money in real estate. So if that's something you're considering, again, go to my website, listingsincharleston.com. Contact me and let's have a discussion about what to expect. But getting back to this kind of big picture for 2015 for investors, we expect home sales to increase again this year. It's a good market for buying and flipping or buying and holding. It's just not as good as maybe it was last year or the year before. If you look at the second quarter of 2012, flips, properties that people bought, renovated, and then put back on the market accounted for about 10% of the total sales. But the third quarter of 2014, it only represented about 4% of all sales. So there's obviously been a reduction in people that are flipping real estate. But again, make no mistake, there are still plenty of opportunities to do that. And what's fascinating, according to Realty Track, which is one of the many websites that I go to for reliable information on a national basis, is that the gross profit for flipping real estate really hasn't changed over the past few years. It's still about 30% gross. A 30% gross profit on flipping real estate. Now, those are averages. Some make more, some make a lot less, some don't make any at all. That's where you got to be careful. You got to make sure that you're picking the right ones and that you're being selective in what you choose and that you've got your checklist ready and you know what the maximum amount is that you're going to pay for that real estate, because anything over that, all it does is just decrease your return on investment. But for flippers, not as great of a market, and it just depends on where you're looking. Everything in real estate is local, and it's neighborhood specific. There are plenty of neighborhoods and really hot markets that are still struggling a little bit, and they're an awesome place to invest and to either buy and hold or buy and flip. It just depends on how you can purchase the real estate. You make money in real estate more on the purchase than you do on the sale, because think about this, you can control the purchase. You can say, I am only going to pay this much for this house because I already know how much it's going to cost me to renovate it, and I have a realistic idea of how much I can sell it for. That's the approach, not, I really want this property, I'm going to buy it because I think that I can sell it for this much. You've got to have that hard line when you're buying properties, and that if it goes above that price, even by a penny, you are willing to walk away. That's discipline. So Lawrence Yun is the chief economist for the National Association of Realtors, and he says that prices are going to increase about 4% over the next 2 years, which is a good thing. I mean, it's not dramatic, but it's still a good market. That's a pretty normal amount of appreciation. And so there are going to be plenty of opportunities out there for investors. The question is, how are you going to find those deals? And when you find it, are you prepared enough? Do you have your systems in place? Do you have your team in place? Do you know what you're doing well enough and comfortable enough to pull the trigger? Because here's the news flash, and it shouldn't be that big of a news flash. If you find a really good deal, chances are you're not the only one that knows about it. That's just the way it is in our market right now. If you find a really good deal and it's listed on the MLS, chances are you are not the only one that knows about that deal. Someone else is working toward acquiring that asset to either flip or buy and hold. So the real trick is to find those deals that aren't listed yet. Find those listings that are about to hit the market. Find those listings with homeowners that are distressed. Find those listings where a real estate agent is communicating with the seller and they're going to list their house at some point, not yet, but they need to get a few things taken care of. Or maybe you just align yourself with a real estate agent that does a lot of business and you say to the realtor, hey, if you know of somebody that's going to sell their house and they want to sell it to me and do it for a reduced commission because there's not all this involved with marketing the home and going through showings and this, that, and the other, and I can provide an immediate sale, maybe we'll provide you with a reduction on the commission. Maybe we'll provide you with an incentive to purchase that property so that you can buy it at a discount compared to if you just looked at it on the regular resale market listed with a real estate agent available to all buyers. So there are plenty of ways to find those really good deals out there, but you have to be working with somebody that's working the streets, that does a lot of business, and that knows that market so that if that opportunity comes up, you can snap your fingers, you have your systems in place, you have a realistic idea of what it's going to cost to renovate, and boom, you acquire it. Anytime I've made really good money in real estate on flipping or investing, it's either because I found the deal myself and it wasn't listed on the market, or somebody contacted me and they said, hey, Brian, I understand that you invest in real estate and that you work with investors. I have a property that I need to sell and I need to sell it now. Who do you know that might be willing to make me an offer? And every once in a while I'll say, hey, I'm your guy. I'll buy it from you. And it's served me very, very well. And I've relayed those opportunities to others. I mean, I don't have infinite amounts of cash. I can only buy a certain number of properties. So I still have plenty of deals out there that come across my desk where people need to sell. There are excellent return on investment opportunities. And if you're considering investing in real estate, again, they're out there. You just have to be working with somebody that knows the market and that can recognize a good deal when they see one. So if that's something you're interested in, I still think this is going to be a good year for it. We have an incredible amount of renters out there still. So if you want to buy and hold real estate, you have an incredibly large pool of ready, willing, and able renters. But because we've seen that increase in pricing and because interest rates are probably going to increase, the return on your investment on a cash-on-cash basis is going to be a little bit lower this year than it has been over the past few years because prices are going up faster than rent is going up. Just simple math. Anyways, if I can help you with any of that stuff, you have questions, comments, you're thinking about investing, you have a property you want to sell, feel free to contact me. My website is listingsincharleston.com. And you can call me personally, 843-345-1273. We're going to take one more break. And when we come back, the discussion about real estate here in Charleston continues on the Big Talker, 1250 WTMA.
Find Brian Beatty online at listingsincharleston.com. The Brian Beatty Real Estate Show continues next on the Big Talker, 1250 WTMA. Now, here's more of the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA.
Welcome back, Charleston. Thanks again for joining me this hour as we talk about real estate here in the Low Country. If there's anything I can do to help you out, you're thinking about buying, selling, or investing in real estate, and you want to make a move in 2015, please contact me. My website is listingsincharleston.com, and I can be reached on my cell phone, 843-345-1273. We've got a few minutes left this hour. If you have any questions real estate related and you want to call into the studio, number here is 843-556-1250. I wanted to take the last few minutes of this hour and talk about selling your house this year. In 2014, it was a great year for sellers. In 2013, it was a great year for sellers. I expect that to be no different in 2015. What I do expect to happen, though, which we've talked about a lot this hour, is a return to normalcy. I do not see our market having a high percentage increase in the value of real estate. We're not going to have, in my opinion, at least, double-digit increases in pricing. I think that we're going to have a normal, balanced approach to appreciation this year, which is going to allow sellers to sell their home, especially those that purchased at the top of the market that have been waiting patiently for years until their home has reached a point in time where they can sell it and they can actually pay for some commission and closing costs and break even and either move out of that house, or you're doing well and you need to move up. There's plenty of opportunity there as well as our market continues to improve and as our economy improves. And so if you're going to sell your house in 2015, here are a few things that you need to understand and you need to know. Number one, and I talk about this ad nauseum because it's something that I am extremely passionate about, and that is online marketing. When I list my properties for sale and when I sit down with homeowners and I talk about everything that I do for them personally, in addition to what my company offers me as a real estate agent, the majority of it is focused on online advertising because that's where all the buyers are. And that's why I have a very large online marketing budget that I pay for personally, because when you hire a real estate agent, you need somebody that understands how to cater to the online shopper, create some motivation to contact a real estate agent, and then that agent also needs to have the ability to control that conversation and actually receive that lead, as opposed to that interested buyer going to some other random real estate agent that doesn't represent your house so that they can go and sell them something else. There's a lot behind that comment, and I'm going to take this next weekend to talk about that in length because it's worth mentioning how people market real estate online, real estate agents. So here's something you need to know. 95% or more at this point start their search online, but the majority of people that are looking at listings online are doing so from mobile devices. So what does that require? It means that your property needs to be professionally photographed and presented in such a way that if someone's looking at it on a small device, that those pictures are clear, that your description of the property is to the point and makes sense, and that think about this, if you're on your phone, you're moving at light speed. So that is your opportunity to capture the attention of the buyer. And so that goes into number two, is that make sure you are actually ready to list your house for sale. Too many people make the mistake of saying, oh yeah, I want to sell, but they don't do the things around their house that they need to do. They don't declutter. They don't work on staging a little bit here and there if it's needed. Or they'll say, hey, you know what? Go ahead and just take some of these pictures now, and then we'll get professional photos once all that's done, and we'll put those online whenever your house is ready, because we've got a few projects that we need to do. My opinion is let your real estate agent do some pre-marketing, but don't officially list that house until you are 100% ready. Because if you're online and you're looking at real estate and you're catering to people that are using their mobile devices, or they're just online in general looking at real estate, you don't want to mess up that first impression. You might not get a second chance. They might see your house, pass over it, and go and buy something else. You might not get a second chance is the point here. So make sure that when you put your property on the market, that you are 100% ready to do so, and that your property is presented as well as it possibly can. Number three is to separate yourself in terms of your home and your investment. This is not going to be one of those years again where, oh, well, I'll just wait for another offer because it'll be for 10% higher with prices going up as high as they are. That's not really going to be the case in 2015, in my opinion. So if you get a good offer, separate the investment from the personal emotion attached with your home. I had several deals in 2014 that got down to the wire and were negotiating about things like a fridge or a washer and dryer or window treatments. Sometimes, even as sellers in a seller's market, we have to let go of some things in order to get to the other side of the fence, which is either purchasing a home that we really want that fits our family's needs or our own personal needs, or maybe it helps us just get out of a house that we shouldn't have purchased in the first place and we need to downsize, whatever the case might be. But separate your home from your investment. And then the last thing that I'm going to say is to not just hire any real estate agent. Maybe the agent that helped you buy the home is not the agent that you should hire to sell your home. Make sure that you hire an agent that fully understands how to market properties for sale and that had a good track record in 2014 of representing sellers, selling their home for very close to what they priced the home at and in a relatively short amount of time. If agents are taking listings that are overpriced, it's going to sit on the market, obviously. So make sure you do your due diligence and hire an agent that has that level of experience. And if that's something I can help you with, contact me personally. Listingsincharleston.com is my website. where you can learn more about my 59-day home sale guarantee at 4.5% commission, or call me at 843-345-1273. Thanks for tuning in. Enjoy the rest of your weekend.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning from 8 till 9. Contact Brian Beatty online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. 843-345-1273.